Hello again from Core Wealth. This is the June 2021 report back. We are through the first half of the year. The days are getting longer, the nights are getting shorter, and we've got a lot to talk about actually this month. I do want to start off talking about the pandemic situation. Last month we mentioned that a number of provinces like Gauteng, the Northern Cape, the Northwest and Free State were very clearly in their third waves, and in most instances those third waves were worse than their second waves. The other large provinces like the Eastern Cape, the Western Cape and KZN were not as severely impacted. Within the space of less than a month now, we've seen that start to pick up, and the Western Cape is very definitely in a third wave scenario. We just want to appeal to everybody, please keep safe. You know what to do those things, social distancing as much as you can, and we'll get through this like we got through the previous two waves. The vaccine situation, I'll just comment on very quickly what we've expected, and we are already seeing it in South Africa. It's been terrible that the supply of vaccines has been slow, but as vaccines are rolled out, more and more people get vaccinated quicker, and we've seen that. We're through the 3 million level mark. I went for my vaccination on Saturday. The process was quick. I see today they've just announced that they are expecting to open vaccinations for 35-year-olds and older on the 15th of July. I just saw this in a newspaper article. There'll obviously be more details that follow. But the more people get vaccinated, the less the danger of contracting COVID. And so we obviously want everyone to keep safe. So please find out those details on the websites. So what's in the news around the world? The big topic at the moment is interest rates, particularly in the US. They've seen economic activity picking up. Americans are traveling as much as they traveled before COVID. If you look at fuel patterns and things in the US, the vaccine rollout has been successful, and so you're seeing economic activity picking up, but inflation is going up, and that is a risk. The central bank in the US does, however, think that will subside as this initial surge of economic activity normalizes. You're seeing growth happening and particularly an improvement after the lockdowns around Europe, and that again is good for economic activity. We are seeing in a number of countries as well that infrastructure investment is happening, and that is really positive for economic growth, and it has a knock-on positively to emerging markets where things like iron ore, things like your resources such as the platinum group metals, platinum, palladium, rhodium, etc., are in demand then in those countries, and that is positive for emerging markets. Oil in a number of countries like Brazil, Russia, the oil price going up is positive for those countries around the world. In the local news, there's been a lot happening. And if you had to ask me to give you one word that would describe why I think this news has been so important, it is the word accountability. We're seeing people being held to account where they've been involved in things or have done things that they shouldn't have done. And those things were being done by senior leaders in our country. As we speak now, Jacob Zuma has been in jail for a couple of days. Just today, his attempt to have his arrest overturned by the courts has been rejected. If we have a look at Ace Magashule, previously the Secretary General of the ANC, his attempt to have his suspension turned over or overturned has also been rejected today with costs. What's actually more important about the Ace Magashule ruling is that it is confirmed that the ANC's rule in their constitution that members need to step aside if they are found to be involved in some wrongdoing has been upheld and has been confirmed as being constitutional. Therefore, there should be a number of other people who, if they thought they could delay things like Ace Magashule has been doing, they will not be able to do that. The courts have ruled on this now, which is really exciting. So if we look at these things, we're seeing that although it's taken longer than most of us would have liked, the tide has definitely turned when it comes to accountability and people being held to account. And there should be a lot more in both the public sector and the private sector where people have been involved in corruption. This is really positive because companies who are wanting to invest want a stable environment, want an environment they can trust. And if you take that together with some of the tailwinds that we're seeing, particularly around the emerging markets and demand for a number of products that we have in emerging markets, that bodes well for future company investment. Last month we mentioned things like companies being able to invest in their own electricity production. These are again just further tailwinds that we think and that we see are coming through in South Africa and will be positive for economic growth, job creation, and starting to lift the country up again. If we look at markets over the last month, the big news is the rand weakened for the first time in a number of months against the other developed world currencies. This meant that offshore shares, for example, were particularly were the best place to have been in this last month. The rands weakened by just over 4% for the month against the dollar. Emerging markets was also a good place to be. The local equity market was actually down just over 2% for the month, and the local property market was up over 3% for the month. So that also benefited portfolios that have exposure to property. Bond market was up over 1%. Cash is just really not the place to be. The returns on cash at the moment are really low. So unless you need it for a defensive portion of your portfolio, you're not getting very good returns from cash. If we have a look at some longer periods of time, as I said, we're halfway through this calendar year and we've seen an interesting picture. We've had good returns from the South African equity market. We've had the best place to have been was actually in the South African listed property market, up over 25% for the first half of this year. And then you still got good returns from your international investments, even though the rand has been strengthening over this first 6-month period. If we look at longer, what we are starting to see over the 1 year, and it's starting to feed into your 2 and 3 year numbers, is that after having almost a 7-year period where South African equities were really not rewarding you for investing in them, those figures are starting to improve. And as I said earlier, the last year we've seen the best place to have been was actually in South African shares and South African listed property. The month of June, it's a very short period of time, but your longer term focused portfolios, the more aggressive portfolios, had more equities in them, more shares, and because the South African equity market was negative, that impacted in the month of June. But returns are between -0.3 and -0.7 for the month, because although the equity markets were negative, their offshore exposure and their listed property exposure helped balance that out a little bit. The more conservative portfolios that are more focused on income did well because the bond market did well, cash is a nice underpin, and listed property did very well in the month. So our income portfolios and our regular income strategies were also positive for the month. And then lastly, the offshore portfolios obviously benefited from the weaker rand, and so they were nicely positive and saw a good month during June. If we have a look more longer term, we're definitely seeing your more aggressive or longer term strategies being rewarded over the last year. Some nice strong returns in portfolios like Flex and Balanced, and that really being a good pickup for our longer term strategies. In looking ahead, we're just going to have a look at 2 different asset classes, South African bonds and South African equities. If we take South African bonds, the slide will come up now and it'll show you how one determines the value of a bond based on different indicators around the world and in South Africa, and that is looking really positive at the moment. We we expect that you could get from government bond returns of somewhere around 13%, which is really attractive on a forward-looking basis and a historic basis. There's a number of tailwinds, some of the things that I spoke about economically earlier. For example, how well the mining sector is doing at the moment in South Africa has a very direct knock-on to our government finances. So in the last period, when government Treasury reported, they collected 100 billion rand more in tax revenue than they expected, mainly because of how big the profits were in the mining companies, and that's expected to continue. So bonds look quite favorable at the moment, and even compared to other bond markets around the world. In looking at South African equities, we've often spoken about valuation. Today I'm going to have a look at two metrics that measure activity in the economy. The first one is the PMI, the Purchasing Managers Index, and that measures at the beginning of each month how much activity is happening in the manufacturing sector based on the primary industries in South Africa like mining and manufacturing, and tertiary industries like your wholesale and retail sectors. And this metrics has been running since 1999, so it goes back, it's got a long history, and basically if it's above 50, things are growing, manufacturing is increasing. If it's below 50, things are slowing down. And if we have a look at it at the moment, you'll see the graph is healthily above 50, and in fact, if we have a look at the average since September last year, it's averaged at just over 55. So we've seen a strong pickup in the last 9 months. A lot of that obviously is because of the catch-up from COVID, but looking forward, this is always a good indicator of what's expected going forward. And we've seen a nice pickup, and it's expected to continue compared to, say, the Zuma years, as they've now been called, where those numbers were a lot closer to 50 and even below 50. The second indicator we want to look at is the South African Reserve Bank Composite Leading Business Cycle Indicator. That's quite a mouthful, and we just call it the CLI, or it's commonly known as the CLI. And this if it's trending upwards, you're seeing economic activity increase, and it's a leading indicator. So there's a number of things that it looks at, things like what's happening in terms of the mining sector, job adverts, for example, things like that would drive this. It's a leading indicator as to what's expected to come from an economic growth point of view. And you can see again in the graph that this has picked up really strongly since August last year. The prior period to that, it was very much somewhere around the 100 level, and is now much stronger than that over the last while. Again, just indicators again that more activity is happening in our economy, and this will be good for companies, and hence them being able to make more profits going forward. So this is just something that we see as further tailwind to the South African equity markets. And if we look at what different asset managers are predicting, we're seeing strong returns of between 15 and even 20% returns over the coming years per year from the South African equity market. So in conclusion, there are a number of good opportunities in financial markets, and therefore for clients' investment portfolios, that we're expecting to see unfold over the coming years. There will be volatility, markets will definitely go up and down, but the valuations and the number of the tailwinds that we're seeing from economies both in South Africa and globally are positive for long-term portfolios in particular. If you have questions, by all means give us a shout. It'll be good to chat to you, and we keep safe, keep healthy, and we'll see you again soon.